Banks love lending money to people who don't need it. They hate lending money to someone who actually needs the cash. Because if you need the cash and you're in a pinch, they're going, are you worth the risk? Do you have the right cash flow and the right cash flow reporting and the right credit score? And, what do your financials look like overall? So if you do want to get it, it's important to get it early, not later.
Money can be complicated. Let a nerd help you. We're here to demystify the complex nature of money by getting you answers from financial nerds and whiz kids. Welcome to Ask the Money Nerds, a weekly segment of the Wealth Labs podcast where we answer your most pressing money questions.
Hey everyone, this is Garrett, Gunderson, Ask the Money Nerds. I actually reached out to some of the people in our main program at Wealth Factory and said, hey, whatever questions you have, I want to film a video. And so this will be going to them first, but then sharing with everybody else. So Amanda, let's talk about what Turk came up. He's got a lot of questions about the solvency of banks and where you should be, doing with that and whether you should be getting loans. And I think this is a question a lot of people have right now amidst this crazy 2020, financial, whatever you want to call it.
Yeah, this wild ride that we're on, right?
Yeah.
Turk has a few questions on the corporate side and then a couple of questions on the personal side. We're going to start with the questions he has regarding his business.
Okay.
First one, and I know this is common for a lot of small business owners at this time, he's wanting your thoughts on applying for an SBA loan for additional lending capacity if or when it's needed. And then the second part of that question is it comes with a hard inquiry on his personal credit, and how will that impact him on that?
Yeah, I had a meeting recently with the main lender that we utilize with the SBA. He's not an SBA lender, but he does a lot of SBA loans. And he's saying that, one, they're talking about these COVID-19 kind of loans. And he's like, they're pretty tough to get. Like, you've got to be missing payroll. The proof, like, they might be coming out a little bit too late because they've moved them to 30-year terms versus sometimes you got 15 or 20-year terms. They've moved them to 3%, 3.5% interest, which is really, really good for a business loan. Although ironic, the Fed's cut the rates down to nothing. And yet, banks are still charging this interest rate. So they're not, they're not quite moving down as fast. But I think that having access to cash before you need it is the key. Banks love lending money to people who don't need it. They hate lending money to someone who actually needs the cash. Because if you need the cash and you're in a pinch, they're going, are you worth the risk? Do you have the right cash flow and the right cash flow reporting and the right credit score? And, what do your financials look like overall? So if you do want to get it, it's important to get it early, not later. And I'm reading an article recently that my CMO, Matt, sent me out of the Wall Street Journal. And this came out, just not too long ago. It says, another problem for the Fed. Banks pressured as clients scramble for cash. So there's a variety of firms drawing down their lines of credit to cover costs and make payroll with the changes in the economic situation. But there's also people that are just drawing them down. They're getting that cash because they're worried the banks are going to start cutting those lines. In 2008, 2009, 2010, we saw this where, people might have a home equity line of credit or a business line of credit they're used to tapping into. But if it hadn't been used or there was pieces of it that hadn't been used, they just started to lower it or cut it out completely. And I think we run the same risk because some people right now going, oh, stocks are a great deal. Whatever, we're only a few months into this issue. And before COVID-19, we still had economic issues where we were over consuming through borrowing and, getting a lot of what people were buying through the lending, whether it was really long-term mortgages or really long-term car loans or consumer debt like credit cards. And so in this consumeristic situation, we were in a pretty fragile state as it is. I don't think this is a quick turnaround. So access to cash and capital is absolutely important. And you want to get it to that sooner than later because I think more and more people are going to be asking for it. And it's going to just create a longer time with underwriting and processing and just what's going to be available from the banks, especially as defaults start to happen.
Mm-hmm. So is it worth the risk of him applying for this SBA loan and damaging part of his credit score? Because he's in an industry which is landscape and snow and ice service removal.
Yeah.
So although he qualifies as a small business owner, chances are he's saying for his specific business that he'll be denied. So is it worth the risk of him getting dinged on his credit?
Look, it's only going to be a hard inquiry, which 1 or 2 of those a year doesn't have a major impact. Soft inquiry is when you look at your own credit. Hard inquiry is you have someone else look at it. But if it's a business loan, they're looking at your credit. They're not going to use your credit as far as showing it as a loan on your credit report. When it's a business or commercial loan, that doesn't show up on your personal credit unless you default. So it's absolutely not going to have much of a deal, especially you mentioned before we start recording. He's above 800. When you're above 760, you're at a pretty magic number. One inquiry isn't going to make a big difference.
Okay. All right. Ready to move on to question number 2?
Let's do it.
Okay. This one is going to give you some background information, so it's a little bit longer. It says our current business bank lock, which is based upon an ARS collateral, which is low this time of year from snow season transition to landscape season, is currently utilizing $175,363 with an available lending capacity of $124,636. Should we put in a request to pull on a line of credit to max it out and put the funds into our money market emergency account so the funds are in our possession, avoid any reduction in lending capacity if the bank starts to implement that? The interest rate fluctuates based upon the balance between 4 and then 5.75%.
Right. So obviously the money market is going to have a lower interest rate than what you pay for the loan. The difference between what you're earning and what you're paying, that spread, look at it almost like an insurance premium. You're paying a fee to have access to that capital because these institutions are very likely to take that away during crunch time. So if you have access to it, is it worth paying that fee on a monthly basis to ensure that you have those funds? That's something that you're going to have to answer yourself, but it might be worth it. Now, if you have an overfunded cash value policy, you might be able to take those funds and get a little bit better if you can put it into PUA, paid up additions that go, into the cash. They're not much on the commission, depending on which company you're with. And so measure the money market versus that and how quickly you might need the money, because you can access that 30 days later. So it's not going to tie it up for a really long time, but it might be doing a little bit better than a money market. But there's also internet banks that do a little bit better than money markets, especially depending on the deposit size. You might even see a 2% or something return. So once again, not overly exciting, but maybe on the other side, he can maybe get 4% or something like that, which might be a little bit better. But you got to look at a little. There might be some commission that comes out, so it might create a little bit of time frame, and you really want to kind of analyze that. So what you pay, is it worth it to have access to the capital? I think in today's times, it's definitely something to consider, and I would look very strongly at doing it.
Okay. All right. This one's also related. The first 3 questions are similar, but the last one on the corporate side here is, he says, we have a business Visa credit card, $50,000 with a 0 balance, intended as an emergency fund credit card. Mm-hmm. Do we utilize that, which must be paid off monthly, to buy time and float cash?
I like the other options better, that we've talked about. Potentially an SBA loan. You got to make sure that you can make those payments, because there will be payments on that. The line of credit, which you get access, more immediately and very easily because it's already available. And this would maybe be, your short-term strategy if you really needed to get access to cash. But overall, yeah, it's the least desirable of the 3, other than it doesn't take the amount of time that it takes to get an SBA loan.
Yeah. All right. You ready to move on to the 2 questions that he has on the personal side?
Let's do it.
Okay. The first one says, we are in need of a $30,000 roof repair. There's just leaking that's causing extra damage on the interior. Do we proceed with only the finance option via PayPal at 0% for 6 months and then move the remainder to a balance transfer credit card? I don't think I'll be able to keep my credit utilization below 30% using the PayPal credit or the balance transfer, which will negatively impact my credit score, obviously. So
yeah,
for a new roof.
Okay. So look, you've got the ability to potentially go in and ask for increases on your lines of credit on your personal credit cards. Business lines of credit, an increase doesn't really help your credit score utilization rate, because once again, that isn't really going to be reported unless you're in default. So on the personal side, can you get your limits up higher? on the existing ones that you have. And I would really take that into consideration overall to kind of help keep that under 30% and maybe spread it amongst a couple that are out there. I'm guessing there's not the cash there just to handle this on his own. Otherwise, he wouldn't be asking this question. And so just be careful in these times doing things like this. I mean, if it's something that's an absolute necessity, okay. I mean, you might even be able to get a little bit cheaper labor based upon what we're seeing out there right now. So take that into consideration as well.
Okay.
So here's the dilemma a lot of business owners face right now, or really anyone in general. Cash flow and cash on hand, right? The stronger our cash flow, the easier it is to navigate these kind of chaotic times. The leaner that is, or when people have no cash flow, which a lot of people, they're just putting their money in retirement funds, they're in the most dangerous place because it's locked away. It's not bringing in cash on a regular basis. And we find out just how critical cash flow can be in, times where there's this restraint and kind of like, cutting back and everything. So I think it's important to manage the two. Having cash on hand is essential as long as having that cash on hand isn't so expensive and starts killing your cash flow that it maybe takes away from, having an employee or, investing in the business. It's, we've got to kind of that delicate balance of having enough staying power to get through in a time where we don't know how long it's going to last, and having enough cash flow to make those payments over time. So some businesses right now, they don't even have their doors open, right? So when are they going to be open the doors again? Other businesses, there's a few that are doing really, really well. Obviously, Costco would be one of the ones at the top of the list, and Amazon. But we've got to kind of look between both things, and having access to something like a line of credit's awesome unless they chop it down and cut it away. An actual installment type of loan, like an SBA loan, great. You know that you've got the money, you've got a good interest rate, but you have to make payments on it. So these are the things that we got to take into consideration. We have some, easing when it comes to some of the taxes. It is the time to look at refinancing if that's at all possible. I would look at getting access to cash, but I would be doing everything I can to say, how do we add more value to our existing customers? How do we reach other customers? And how do we make sure that we're creating cash flow to manage all these different things that are going on?